Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Peterson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Peterson. So once again, I have my friend Ryan Parson with me. He is with Mile Marker Club. And today we are going to be doing, for those of you who are watching on video, we've got some visual aids. For those of you who aren't, you still will be able to follow along. It'll be somewhat conversational, but there is some visual support. You can find this, this particular episode is on YouTube. Or the realestateriskreport.com website. So, Ryan, thanks as always for joining me. Appreciate having you. You are our sort of bringing us out of the weeds and back to a more holistic view, which is kind of what we're going to be hitting on today. So super excited to have this conversation. How are you doing?
I'm doing very well, Lance. Thanks for having me back. It's always great to be able to have these conversations with you. And I just always so appreciate what you do for your investors and in your audience, Lance, to help understand the world of investing and all of the different intricacies that go into, just beyond, looking at a deal. So it's always great to be here with you talking about these topics.
Yeah, no, it's my pleasure to have you. So yeah, we will be sort of, like I said, panning out, as I call it, looking at things a little bit more globally. And I think that it is, before we hit record here, Ryan was just sharing that, yeah, I mean, we, on a specific deal level, of course, we're really looking at what are all the risks involved, and how do we mitigate them on a deal by deal basis, or at least understand them and understand how, the deal sponsor, the operator of the deal is planning on mitigating those. But I think that, as Ryan points out, you do really need to look at it more from a, your entire financial world. You have to have a risk mitigation strategy, a risk management strategy, right? And understanding that, there's different risks. And if you've got, imbalance, and we've talked about this on other episodes with Ryan, which you can find, on the realestateriskreport.com website, to kind of get up to speed on that. But today we're going to kind of focus in on, the way that you need to kind of start scaffolding this, right? It all needs to start at kind of a deeper rooted inside yourself and understanding, what the different component parts are. Like what do you value, and who are the people in your life and the relationships, and, all those sorts of things, and who do you look for advice, and making sure that you've got those things and you understand those things before you get started. So Ryan, why don't you kind of start off by just sharing how you work with your clients and your members, to kind of, navigate this process so that it's not so, overwhelming.
Absolutely. And I appreciate that. I think that's a great overview, Lance, of some of these components of what I call discovering your optimal financial world. And looking forward to chatting with you about those today, Lance. And just, to keep all of the attorneys happy here, just the classic disclaimer, no tax advice, no investment advice today. We're just having a conversation, Lance, and sharing our thoughts and our experiences that we've had with so many other successful individuals, entrepreneurs, and high net worth families that have embraced alternatives, embraced real estate into their portfolio. So that what you mentioned, a couple of those topics about values and relationships, and I for today's discussion, Lance, kind of setting some of the framework here a little bit, is really realizing there's a distinct difference when you think about risk management of your investments, and then risk management related to all things your wealth, or all things your treasury. And sometimes, and maybe for newer investors, Lance, that may not be as experienced with real estate investing, they start to think of risk management first as it relates to the deal. And like you just mentioned right at the beginning here, there is definitely anything that we look at going investing in, we ask our deal sponsors, we ask our fund managers, whoever we're entrusting our investment capital to, what circuit breakers do you have in place for different potential things that could happen? And that certainly is one element of thinking about risk management as it relates to a deal that, of course, folds into your wealth if you choose to invest in that deal. And of course, that's what, Verivest is so strong and so spectacular at looking at those granular elements of the deal sponsors that come onto the Verivest platform, the deals themselves then that come onto the Verivest platform. And then it's the investor or the high net worth family's job to look at risk management through their portfolio lens. So I think those are the things that we can kind of talk a little bit about here, Lance. And you mentioned one of them already is the idea of values, and how we see the successful families that we serve here at Mile Marker Club today are one of those elements that we get to be very clear on about their family values. And examples of that is what is the as far as the wealth is concerned, what does the family want to see happen with that wealth for the long term? And by the way, Lance, this isn't these concepts we're going to talk about today are really for any investor at any level of wealth. This doesn't have to be, $100 million net worth family office. The ideas apply regardless of the size of your wealth. So when I say what is the purpose of the family's wealth, the dollar amount is not important here. What is important, regardless of the dollar amount, that you start to get clarity around what are the family's values. So, examples of that, might be teaching other generations in the family about the wealth. It's not just maybe letting them inherit the wealth, but teaching about that. It might also be about what is it about beyond the family itself or beyond the investor itself that the wealth can be doing. And so those are just some examples of values. And, Lance, over time, this changes for families. And, you think about your own wealth. I think about my own wealth. And, when we started off, maybe back in our 20s, starting to accumulate our wealth and find our paths, what we think maybe the value or the purpose is different to where it is today. And, 20 years from now, it might look different too, because of different experiences that we have in our lives. And so sometimes we think that our values, we are who we are and they don't change. But in reality, especially as you do grow your wealth and there's others that are involved with your wealth, those values can change, and that's okay. But that is part of really, getting to the core, with this kind of this first element of identifying what are those high level values that are probably not numeric. Because the numeric is where we really think about what are the goals, what are the numeric goals. We want to grow our wealth by X% over, Y period of time. We want to increase it, or we want to have X amount of cash flow by this point in time in the future. Cash flow meaning coming from our investments, our passive investments, and so on. And so values and goals are very distinct in terms of how you build them when you start thinking about your overarching wealth strategy, particularly utilizing values and goals to start to identify your risk management strategy.
Yeah, and I suppose it does. It's when, anytime one contemplates what they value, right? Like what are our values? You start there, and it sort of says, well, what are we all about? Or, what matters to us? It's more qualitative, right? These are the things that we're for. You start to say, well, what are my goals, in a vacuum, independent of sort of what do you stand for? I think to your point, it becomes a little probably more numeric, and maybe it's not, it wouldn't be as fulfilling, or maybe you're the goal posts are being set in the wrong places and in the wrong areas and wrong directions. Would you agree with that? Where it's like, I'm going to go and save things can be countered each other, where it's like, I need to save $500,000 by the time we're, 59. And then, well, what will it take to do that? Well, it means that we basically are eating rice and beans and never going anywhere between now and then. Well, that seems to run counter with the fact that, you wanted to spend more quality family time and whatever it might be, right? Like they start to, well, those two things are not the same.
Yeah, that's exactly right. And those are some classic examples of it, Lance, of, you want to spend time. And that's probably even, what this next slide is about is just understanding who are the key critical relationships in your life, or I should say, what are some of the key critical relationships with our lives or inside of our lives? Because that's a big mantra I've always followed, Lance, of living your best life. I mean, that's been, what I try to live my own personal life by. What does living your best life look like? And, when you think about, we all only have 24 hours in a day, and none of us are guaranteed, the next hour from now, maximizing the time that you have and doing things that you want to do and impacting other people's lives, is generally part of all of that for us. And understanding these relationships, be it our spouses, our kids, our grandkids, our charities, even our businesses, maybe our business partners, whoever those really critical relationships are that are maybe part of why you do what you do and why you're motivated to do what you do, and having really clear stock of who those relationships are. And, Lance, this has been something for me over, I guess 25 plus years now of being involved with real estate investing and alternative investments, and also having just the really good fortune of working with other really successful individuals and entrepreneurs and high net worth families that share, where we have the shared values of real estate investing and that. I've realized over time too, I've had toxic relationships in my life. And I think every family that we serve today here at Mile Marker Club, and just having the good fortune of working with families like this, have, shared that with me over time. We've had to exit relationships, and it's not, all different types of relationships that you realize just don't fit in with your shared values for whatever reason. It doesn't mean that other person was wrong. It just, there's not a congruency anymore. And so, thinking about back, obviously coming out of the, health, worldwide health crisis that we've had is really shaped and changed a lot of things, as far as changed values because of the way we want to spend our time and who we do that with. So this idea of it's about relationships, it's about those very personal relationships in your world, and really taking stock of those. And sometimes, Lance, you think we're talking about from a risk management standpoint. If we're not clear about who those really key relationships are, or we haven't thought about what certain types of investments might mean to those relationships, that can create misalignment, where we might be investing in what are perfectly good deals. They're just not really perfectly good to support the true relationships in our lives we're trying to support.
Yeah, it's a good point. I mean, it's sitting down and taking inventory and stock of, these few, like you said, values and goals in these relationships. If you don't do it, it's easy to sort of drift off course, right? Mm-hmm. And I think that we use the word investing a lot, but I think if I can summarize even what you're saying too, is it's about, you need to take inventory of the relationships that exist, and you need to ask yourself, which ones have you been investing in? And is the return on that investment, not financial per se, right? I mean, this is important, because I think that, you hear the word toxic is sort of loaded, but it's also just sort of like, what am I spending my time fretting about or worrying about that's out of my control? And I'll just use my example in the spirit of being transparent, right? Like, my own father is an example. He kind of went through a bit of a midlife crisis. Well, not a bit, it was one, right? And this was when I was in my early 20s. And, and I was all the way out in Portland, and they were in the Midwest in North Dakota. But it was just every day. It was a phone call about, oh my, this happened. I mean, just, crazy stuff. Everyone's got the crazy stuff that goes on, like really, really crazy stuff. And of course, it was on my mind, and I'm trying to build a business and run a business, and I'm trying to build a family, and I'm married, and all these sorts of things. And I just said, you know what? I got to nip this in bud. I'm going back out there. I'm going to meet face to face with my dad. I'm going to say, listen, you either get help now or we're done. And it sounds hardcore, right? But I literally was like, listen, I can't live like this. You're making a conscious decision that's making a bunch of other people's lives miserable, right? And it has overhead, right? And there's a cost, and it just does. And it's like, listen, it's your life, you decide, but you don't get to, have it affect the rest of us. And that's what I did, right? And I said, and whenever you're ready to sort of like do something about it, then I'm here. I'm not going anywhere. I don't love you any less, but it's just, that's the sort of thing is that, and I hear this a lot of people, they're always like the families and the so-and-so and the sister-in-law or the sister or the whatever. I mean, I'm not like Mr. like excommunicate people or whatever, but it is a bit of that, if I'm investing all of this negative energy in these relationships that won't bear fruit and are sort of bringing you down and they're whatever, then it just doesn't make any sense. It's like investing in a stock. I mean, that's what I mean. It sounds weird, but it's about investment. And if you're putting energy and effort, your time is your most precious commodity into things and mind share and mind space, you got to cut it out, right? You've got to make a change. And it's right. Like that's part of the process but not taking stock and thinking about it, you're going to waste years of your life, right? Dealing with that crap.
Mm-hmm. Yeah, there's the flip side of all that too, Lance, and we've all gone through that, both with very personal family relationships and then the other different types of relationships, and it's just a big thing when we again the families that we serve, Lance. It's about the people that they're doing things for and why they exist. And so having a good, connection to that, really does, help create then what types of investments truly do you want to go into that everyone is on board with and everyone can get around, and those types of things, depending on the continuity that you draw and who's truly in that circle. So I think those are great points, Lance, and very salient ones, because look, we're people, we're human beings, we're human creatures, and we're designed to help support other humans. And I know that might sound a little bit esoteric, but it's for all the experience that we've had working with high net worth families over 2+ decades now, and I think of even my own family, this is who you want to spend the time with, this is what you do, and being very cognizant of that is important, because starting to take stock of the assets, of what you have that truly makes up your net worth or makes up your balance sheet or makes up your financial statements, all kind of different nomenclature for a similar collection of everything that makes up your wealth. And, what's been interesting about that, we were just talking with one of our families last week, Lance, about, we've seen over the last year and a half or so, as we've been dealing with the pandemic, and everyone's of course had to deal with it differently on a personal side anyway. But I had one family say to me, Ryan, we've been hearing you talk, and, have been clients with us for a long time. And, when times are good, Lance, so sometimes as investors, we don't really take stock of what is the true value of our assets. And when I'm talking assets, I'm talking true investments here. I'm talking our true real estate investments, our funds, with stock market, the value of your business, anything that's on the balance sheet. When times are good, you don't think much about what is the real value of this underlying thing or group of things that I've chosen to invest in. And one of these, themes that I've noticed, particularly over the last year, is, Ryan, we got to get real at what are these things truly worth? Because, we're going through some bumps in the road. And Lance, you certainly see that obviously with, with real estate that you so heavily focus on. I mean, you see that in realizing, are we kidding ourselves of what we think is going to happen? Or, the world changed, and it's just part of managing risk inside of any investment portfolio. What you think is going to happen isn't happening for whatever reason because the market changed or circumstances changed. Do we need to be honest with ourselves about that this has changed? Or I shouldn't say, do we need to be honest, that we just need to be honest with ourselves, and that the value of our assets may not be what we think they are. And of course, in the world of alternatives, that's a little bit more difficult to do because there's, it's just not a readily, publicly traded market to ascertain what the value is from time to time.
Yeah, you got it. Yeah, we were just talking about this the other day, because for me, as we all know, is that the transparency is like my thing. Like I really want to help foster, better and more transparency between, limited partners and investors and general partners, managers, deal sponsors, whatever you want to call them. And I think this is that key area that, we're not quite ready for it yet, I think, just as an industry, but, we need to be moving closer to it. And that really is, doing more fair value, assessment of these underlying assets. And, and obviously we've got a lot of open-ended fund clients, where they do go through a process on a quarterly basis of assigning what they believe the true value of the assets are, and that's helpful, right? Because in times like, last spring when, the pandemic sort of hit, it just forced people to say, well, as of now, based on the information we have, these assets are not worth what we thought. And we're going to sort of, mark them down. And even though that's a tough conversation, but a lot of this is sort of people just stick their heads in the sand, I think is what you're sort of referring to, that, let's be honest with ourselves, what are these things? But it also means that these, deal sponsors, one way or another, just attributing and assessing value and making that known to the end user investor, because there is a whole concept, it's a fancy term, but called residual value, which is a metric that should show you as an investor what kind of value remains in the investment, right? Meaning if it's just held at book value, right, and what you paid for it, that doesn't tell you anything, because the property could have went down in value for whatever reason, a recession, or maybe it's went up in value. Either way, you have no visibility into it, so you're basically just flying blind, and it's difficult to answer that question. Right. And everyone's afraid to sort of go out and attribute a value to it. I get it. These are liquid assets, but it sure would go a long way in allowing people like your club members and your team to have a better idea of what you're kind of dealing with. So.
Yeah. And it is hard. Look, this is part of the reason, Lance, why you and myself and, all of the investors in our worlds that we both work and run in. It's why we like alts, though, and particularly why we like real estate. We realize there's an illiquidity risk, but that's, why we expect a higher rate of return, and hopefully, ultimately get that to compensate us for that lack of either ability to value or create liquidity from it, for all of those reasons. And, even the flip side of that too, Lance, you mentioned it briefly there about, assets do appreciate, alternatives and real estate included can and do appreciate over time. And, as we're talking about it here from kind of a holistic wealth strategy perspective, related to your risk management procedures for your wealth, you've got to be able to understand that too. If an asset is appreciated, and of course, kind of right now, particularly to real estate, where it's been, very transparent in a lot of cases, is the single family space.
Yeah.
That's obviously getting valuations in single family tends to be a little bit easier to do than, sometimes commercial or other types of, or variations of real estate investments. But, realizing too, if you've seen a significant run up on some of your assets, taking stock of that and going, oh, is there other things we can do maybe with some of that hidden equity or trapped equity, or wow, that thing shot up a lot faster than what I thought it was going to do. I was always going to sell it if it got to that point. It just happened faster than I thought. And having some clarity around those parts of your assets too. It's not just about going down, that obviously that happens and it's a risk, but it can be as much of a risk if something goes up higher and you don't take advantage of some things sometimes along the way too. So having that clarity around those assets, I think, is really critical. What we see our families who are really the most successful over a lot of market cycles and over a lot of generations, are honest with themselves about what's going on with their selected assets.
Yep. Totally agree.
Yeah. So another component, just a couple of last ones here, Lance, when we talk about advisory board, it's really who is really in your inner circle, helping you with your wealth, thinking through your wealth, and one of the things, particularly with alternatives and real estate investments, is who you're entrusting your capital to. So the fund manager, the deal sponsor, whatever name you want to give them, they're really become part of your advisory board. If you're entrusting your capital to them, these are all those people, in addition to some of the other types of advisors. Maybe your CPA is on there. Maybe your philanthropic advisor is on there. Maybe your estate planning attorney. Just all of your other board, what we call your advisory board, who is all on that, and how are you interacting with them? Those types of things is really cool. It's a different, a little bit of a different take, Lance. When we talked a few minutes ago about the relationships are more about your personal relationships. Your advisory board are more about your professional relationships, just to kind of make a little bit of a distinction about the people here. So those are, I think, is a really critical element, and so that you're really, that board of advisors is there to help you make consistently good long-term decisions about your wealth. And it's not just about investing. Investing is a piece of it. It's, about the advanced planning components that come in, whether it's related to tax, related to growing your wealth, maybe for your heirs, magnifying your charities to the extent charitable giving is important to you. So, and it's really not missing out on opportunities when there's moments of opportunities to take advantage of different things, be it with investments, or be it, as tax code is constantly changing, or market conditions are constantly changing. If you own a business, Lance, you're certainly know exactly what that is. You're owning a business, growing a business, you ultimately sell a business. Obviously, we work with a lot of entrepreneurs that, start off their business and, hopefully go and sell it and create a liquidity events for themselves and their stockholder shareholders. That's what I mean about the process of, not missing market opportunities. So I think that's just another, key component that we've seen families be really strategic about their wealth with, and being, again, honest with themselves. What processes do they need to follow to stay consistently making good decisions over the long haul? And who do they have on their board of advisors that they really trust, that are advising them on these, the myriad of issues and the myriad of things, myriad of concerns that we all have, and as we experience them throughout our lives.
Yeah, and I do like the concept of looking at, a deal sponsor more like it's like a sub advisor, right? So, and that's why it's super important, obviously, vetting who those operators or deal sponsors are, fund managers, whatever, is so critical. And if you think of it that way, that's why. Because if you think of it like, I'm adding them to my advisory board, now you aren't asking them to be on your board per se, but it's just thinking of them as like they're a sub advisor. You are allocating capital to them, as you pointed out, right? And they are, become stewards of that capital to execute the strategy, and it is your wealth after all. So, I like that concept.
Yeah, it's a big thing, Lance, and it just starts to make a little bit of a distinction of, do you see it as an investment, or do you see the people managing your wealth behind the investment? And that's I think a big element today. And I like what you just said, think of your deal sponsors maybe as a sub-advisor. They're, maybe not at the table with you throughout the quarters, throughout the year, like your CPA or your personal CFO would be, for example, but they're there nonetheless. And that's something I've learned over the years, that whoever I'm entrusting my investment capital with is really, truly, like you just said, a sub-advisor to my wealth. I think it's a great analogy. And, to kind of put a bow on some of these ideas and some of these components to help think about risk management on a global or holistic basis, Lance, is really, what do you enjoy? What are your interests? What are the things that you like to do? And that is, different, from the values per se of you or your family or whatever the source of your wealth is. What are truly the things that you like to do? And for us, trying to help our families live their best lives, where do you like to spend your time? And, for a lot of our clients, Lance, who are entrepreneurs, they love spending time on their business. It's their passion, it's their baby, and that's perfectly fine to do that. It's just acknowledging that this is where your interests are, or again, acknowledging this is maybe where you'd rather have your interests, and it changes over time. And again, the pandemic has changed a lot of things for a lot of us for a whole myriad of reasons. But taking stock of that, what truly those interests are, or the interests of your spouse, two spouses that have helped build the wealth over the years, of really identifying what that is, because part of maybe what your interests are today than what they were last year, or, even before the pandemic started, Lance, does start to change the types of investments you might invest in for a myriad of different mathematical reasons and economic reasons, of course, but being true to yourself about what your interests are. And, on top of the other elements we've talked about, who's your board of advisors, who are those key relationships you're really in, your values, your goals, your processes that you want to go through, really shape and start to drive your overall risk management, just the way you think about risk when you're really well aligned to your interests and your values.
Yeah, I agree. And just to use myself as sort of an example, right? Like, been an entrepreneur my whole life, have been building things from scratch, lots always at risk, right? Like there's no certainty that the ideas are going to work out or pan out, but the thing I, realized in the last few years, right, is that, they don't have to be mutually exclusive. So for me, realizing that, hey, there's certain clients that I really enjoy spending time with, and there's those that I don't, right? And so you get to a point where you're like, you know what? I'd rather just spend the time with the people that, I really like working with. And then I started to say, well, why do I really like these certain people, right? And then it goes back to what you were saying, is because of the shared values, right? And I think for me, this is where it became that, as fund administrators, we're behind the scenes, but from day one, since we started doing what we've been doing, it has been about feeling like it's our job to police and ensure that there's fair play, right? Between, and so we show up to work and we're making sure that, hey, we want, everything to be fair and equitable amongst all the participants, and that the agreement had been signed. And, whereas everyone else probably looked at us like, these are just accountants that just do accounting stuff and whatever. I don't know what they thought, but we looked at ourselves differently. So for me, it then says, well, how can we make a difference, right? So how can we help create access? How can we take what we do and make it more enjoyable, to your point, right? For me, because then it's like, yeah, I'm working really, really hard. I've always have worked really, really hard, but I can work really hard and feel really good about what I'm doing too. And I think even in the last 6 months, taking it even a step further to realize that, some of this social impact stuff, and it's not just, okay, Verivest is sort of a bit more exclusive, than maybe it was before, meaning that, you've got to be good people, right, to do business with. You got to pass background checks. You got to be committed to being more transparent. So that's in better alignment, I think, but taking it even further, realizing that we've got some clients out there who are committed to not just making money for their investors and being good stewards of their money, but they're interested in, in changing people's lives and communities. And, with just different programs to help them get better access to healthcare and rent relief if needed, and these sorts of things. And so you start to realize that you can take what you're doing, and even inside of it, you can begin to make subtle tweaks and changes, right? To make it to where you can do it today. You don't need to wait. Like, I don't need to wait to be philanthropic. I mean, I'm a business owner. It's everything I've got is real estate and entrepreneurship are illiquid. That equals cash poor, right? That's just how it goes, but it really is, well, today I can go out and make a difference through this podcast and let people know that, hey, when you're assessing sponsors and deal sponsors and whatever, look to see, why they do what they do, because there are guys out there who might know how to they're really good at making money, but they're also really good at making money while they make a difference in their community. Right. And those are the things that you can stack those things, and you by proxy become a part of that. Right. It makes you feel good about what you're doing. So
that's right.
I think that those are all this stuff is just taking an inventory. Everything you've covered here today is that if you don't stop and think through these things and contemplate them, you could get down the road and sort of, you've been wandering in the wrong direction the entire time. Right.
That I think that's very true, Lance. And, just in my own experience, I always thought, especially once I started becoming a real estate investor, 20 plus years ago now, I guess, I'm like, I had to learn it. I had to do it all on my own. I had to, it was just Ryan. And I, when I finally realized, took the blinders off, that there's other people out there with really specialized knowledge and, want to be sitting on, my side of the table with me, so to speak.
Yeah.
And, these elements, as that has just evolved over time too, that's where, I've realized that, what we like to do and what I like to do, particularly from the business of the club standpoint of be that personal CFO, and realize, sometimes we all need a little bit of help to keep us on track from time to time, or we need just a little bit of tug from time to time, or a nudge from time to time, or a reminder from time to time, because we are successful entrepreneurs. Lance, you work with a bunch of them. You are one of them that, we get going in our business and kind of forget what the greater good is, or the greater purpose that we truly are committed to. But, things are happening, especially in the world we live in today. And, every now and then, that's why you've got to have a good trusted inner circle around you to help with those things, and keep an eye on a few things if your eye falls off of them for for whatever reason.
Well, not to mention too, like what you guys have done is you've built a community around it, right? And so I think that all these things we've talked about, like you said, is that it doesn't matter how little wealth you have or how much wealth you have. These are things that you should be contemplating. So it's one thing to contemplate them, by yourself or with your spouse, and obviously with maybe someone like yourself, or, one of your advisors, or, just the people that coaches, whatever you want to call them. But to do it with in other people like yourself, right? Like just that community side of it. I mean, even for us at Verivest, that's the piece we've launched this sort of online community component of what we're doing to try to bring these people together. Right. So it's one thing to just do all this verification and ongoing and accounting. And I mean, it's great. Obviously, that's what we do. And that's the value we add. But they're the shared experience of knowing others who are going through the same things and fostering a community, right? And letting other people be a part of it. It's just, these are things that, it's just, I don't know, you say it out loud, it sounds floofy, or I don't know what it sounds like. I mean, because clearly in my early 20s, I was just this driven entrepreneur. Like I was just like, it just like grow or bust, right? Like everything's, to that end. But as I've gotten older, you've realized like, you know what? Yeah, I mean, I want to grow as much as the next guy, but it's just to know that what you're doing makes a difference. You connect people, you foster community where people feel like they can belong and be a part of something bigger than themselves is far more rewarding. And it's storing up treasure, right? For heaven. It's the other stuff. A lot of the stuff, just, you can't take it with you anyway. Right. But while you're here, those things can't be taken from you. And it's thinking of it that way, because this wealth thing and investments gets very analytical really quick. I know it because people are chatting with me or calling me investors, and they're like, Lance, what do you think the skin in the game should be and what's reasonable. And, as though they're in some like grudge match with some. I'm just like, okay, can we just slow down a minute? Right. Like, let's back up here. Right. There's no percentage that's the right answer. You're thinking about it the wrong way. You're trying to figure out alignment, financial alignment. Right. There's some questions one needs to ask before you can figure out whether that exists or it doesn't. It's just one thing. It's not the thing.
Yeah, that's well said, Lance. And I know that's, part of, with Mile Marker Club being part of the Veravest community, and that is that it's being able to go share and multiply, your God-given talents and what you can do, so that, you're helping others go do whatever their life's work or their life's calling is. And it's so much more than any one of us can do on our own. And, I'm just so grateful for your community, all of our clients that we have around us that, have that idea, and, to watch it multiply is so much bigger than yourself. And so it's always a pleasure to be a part of it with you, and to serve your clients, Lance, and, help everyone, truly get to live in their best life the way they've outlined it. So I think it's very well said what you just mentioned.
Yeah, no, thanks, Ryan. Yeah, this is why I like doing this. I like bringing you on, because this is the world you live in, right? It is that holistic, just view of living your best life. And, but it's just all how those things connect is really important. And I think that it can't be lost. And of course we do get on here three times a week and really wax poetic on, all this like stuff in the weeds and all the details and those things, but it is important to kind of pan out. So love having you on every now and then to keep us sort of grounded, so we don't get too, we don't lose ourselves down in the risk weeds, so to speak.
Well, it's always a pleasure to be here, Lance. Thank you for the invitation to have me back.
Yeah, you're welcome. And where can people learn more about what you're up to, Ryan?
Sure. Anyone who is interested in learning more can visit us at milemarkerclub.com and take a look and see if there's interest there. Always happy to offer a second opinion on these different types of ideas and different types of topics. So glad to assist any of your audience who would be interested, Lance. Thank you.
You're welcome. Thanks so much. Take care, everyone.